Walk me through the product mix. Is this just the Q5 selling really well, or is this a diverse range of products that Audi is finding some traction with in America?
You know, John, I think it's across the board. But as you said, to succeed in luxury, you have to have your core segments. And in my mind, that's the mid SUV and that's the large SUV. So that's our Q5 and Q7. And frankly, we had record years on those two. So those were great. But we also hung on to our sedan business. Basically, our sedan business was flat. And in this market, actually, that's phenomenal. So I would call it diversified. Obviously, SUV is a little stronger. But most importantly, the brand is hot, the brand is strong, and that's really what's driving the business.
Hey, Scott, if I asked an economist about the tax bill and what it would mean for growth, they would say on the one hand this, on the other hand that. I just want to get to the bottom line with you. Does the tax bill help or hinder premium car sales in the United States of America?
As I look at right now, from what I've heard and what I understand, it looks quite positive. Because in my mind, the luxury business is driven off of consumer confidence. Consumer confidence is at an all-time high. If you look at the stock market, as you've been reporting, obviously it's quite a high market, a record market. So clearly people are responding to this tax bill. And it looks quite optimistic from my point of view. The only note of caution, I would say, is to look after places like New York and California, where it looks like you have obviously expensive state taxes, plus the housing expenses and what you can deduct there and not. Something worth noting, but generally very positive from my point of view.
Scott, can the likes of Texas make up for that? I was looking at your performance in places like Austin, places like Houston, big growth numbers, and I was wondering whether that was just weather-related, hurricane-related stories, or whether there's something more fundamental there that can give you a little bit more longevity, a little bit more growth through 2018.
I think it's 100% sustainable. Look, Audi has historically had a shortcoming down in, let's call it, the southern markets. We've always been a brand of Quattro, cold weather. We've been working on this plan for 6, 7, 8 years, and it really came to life this year. Massive dealer investment and obviously massive growth. This is a huge opportunity, and it's going to continue for Audi. No debate. I think this thing's systemic. It's going to go out 3, 4, 5 years, in my opinion.
Well, Scott, the growth for you guys has been stellar. Over 80 straight months of growth, sales growth in the United States of America. But
84. 84. Not that I'm
now.
counting.
I said over 80, so I was accurate, but 84 to be on the money. Scott, are you expecting some regional divergence this year, though? Maybe some softness in California, maybe some softness in New York, and some outperformance in the South?
Yeah, I think it's going to continue. It sort of hit this year. I think the tri-state area is probably going to be relatively flat to down. I think you could see the same thing in Los Angeles. But certainly Northern California was very strong for us. And look, you have regional efforts, but then we still have opportunities as Audi. So in general, yes, I would agree with you. South will continue to outperform. Tri-state and Los Angeles will probably be flat, but Audi's an outperforming brand, and we anticipate continue outperforming.
Scott, I do want to fold in one of the potential challenges, and that's credit. Auto loan saturation possibly in America. How many people are walking into the outlets to buy an Audi and buying cash versus how many people are going in there and taking credit? And how do you expect that dynamic to change?
Look, if you look at Audi, if you look at our defaults and you look at the tiers of our business, frankly, it's just not there. Defaults are near zero. And in terms of risk portfolio, we don't take that line of credit. We're also not doing extremely long terms. It's not in our business model. So again, if you look at our business, we do roughly, let's say 55% of our business is leasing. The rest is being financed, whether it's cash or whether it's retail finance. But our book is extremely stable. One of the other things we're noted for is our residual values. We're not in the business of artificially stimulating residual values because, of course, it's going to cost you nothing now. It's going to give you a headache in 3 years. That's not our business model. Proper pricing. But again, next to zero defaults.